Hey, this is Matt from InvestiQuant. Today is Friday, April 30, 2021. Today is the last trading day of the month, and it's coming on the heels of yesterday's strong close. We had a lot of volatility yesterday. Actually had an outside day where we opened up above the highs, sold off throughout the morning session, but then buyers stepped in aggressively, taking us back almost to the open, to where we closed just below the open, which was right at the high of the day yesterday. But we ended up with a wide candlestick. But bottom line is it closed up above recent highs, so we ended up with a strong close, even though there was quite a bit of volatility there. But today is the last trading day of the month, so we're going to take a couple of those concepts, combine them here, and see what has happened historically with that type of pattern where you're closing up basically at the high of the month going into month end. So let's set that up here in Discover. I'm going to use all four instruments. The setup's based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. The exit is set to the close, which is 4:15 p.m. Eastern Time. Now, currently, we are trading back down in the overnight session. We're trading down close to the bottom portion of yesterday's range. So I'm going to hit gap direction, gap down here, and Discover to add that to the study. Next, I'm going to go into the price pattern. So I'm going to say yesterday closed at the highs of the month. And the way that I can do that is simply put a day after a 20-day high close. There's typically 22 trading days in a month. So if you're trading at a 20-day high, then most scenarios, that means you're right at the high of the month if you're doing it there at the end of the month. I'm hitting equals next to day after 20-day high close. All right, next I'm going to go into the indicators section. Put us above a 10 and 200. Probably don't need that 10 there, but above the 200-day simple moving average. And then lastly, in the calendar section, I'm going to say it is the last trading day of the month. That is available here in the active today section, also available in the unique days section, one of the many things that we have available within our calendar library. So now that I've got this set up, let me go ahead and hit view results. And here we go. These are the results based upon entering the market long at the open of regular trading hours when you gap down on the last trading day of the month and the prior session closed up around the highs of the month. So you're coming off of the highs of the month and then you gap down on the last trading day of the month. This is in a bull market environment. Historically, we've got 20 samples here for the S&P, 23 for the NASDAQ, 19 for the Dow, and 14 for the Russell. So not a huge sample size on some of those, but the win rates on them are all in agreement and they are a bit weak. S&P coming in at 40%, NASDAQ 26%, Dow 37%, and Russell 29%. Now those win rates are weaker than most of the ones that we look at here, and part of that is simply due to the fact that they don't have huge sample sizes. So it is a little bit easier for them to get a bit more extreme on the win rates, either on the upside or the downside when there's not huge sample sizes. So keep that in mind, but those are quite weak on the samples that we do have. The average win, average loss here, the average win is larger in the S&P than the average loss, but that is not the case for the other instruments. The average loss is larger than the average win in the NASDAQ, the Dow, and the Russell. So historically speaking, this pattern has been a bit weak heading into the end of the month. So hopefully you found that helpful. Good luck today, and we'll see you next time.